UiPath is scheduled to report quarterly financial results on September 5th, 2024, and I'm looking forward to see if the upcoming or incoming CEO can help stabilize this company. The stock price is down significantly, and the abrupt CEO change and downgrade of the profit outlook for 2024 really has this stock in the doghouse. So I'm going to review what to expect from the upcoming earnings release from UiPath and answer for investors if they should buy this stock before the earnings release on September 5th.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So just as I highlighted in the beginning of the video, UiPath's stock price has been underperforming significantly in 2024. It's actually down 54.8% off the high, and the bulk of that decrease coming following that abrupt CEO change announcement with the company's previous quarterly earnings release. The stock price was underperforming year to date at that point, but the losses really magnified after that announcement. So in its latest quarterly update, UiPath reported revenue of $335 million, which was up 16% year over year. Solid numbers. Dollar-based net retention rate of 118% was really strong. Remember, this measures how much existing customers spend with the company in the second full year of service compared to the first full year of service. So a number above 100% means existing customers are spending more with you in the second year. And for UiPath, they're spending 18% more in the second year than the first year. That's well ahead the pace of inflation, and so you can understand that the customer value proposition is strong. Otherwise, customers would not increase their spending with the company. They would say, you know what, we're not getting our money's worth, and so we're going to cut our spending with you or not spend with you at all. The non-GAAP operating income of $50 million was a solid number to be sure, and the company has a pristine balance sheet with $1.9 billion in cash as of April 30th and zero debt. So the surprising news in this quarter's earnings release was when the company announced that the CEO, Rob Enslin, was resigning as of June 1st, and Daniel Dines, the former founder and former CEO, will be reappointed as CEO effective June 1st. Now, this announcement was made on May 29th, so that was an abrupt change, an abrupt leadership change that was unexpected from Wall Street, and investors were left wondering why this happened, why the CEO needed to be changed, or was it a forced resignation? What was so bad that needed a replacement? Along with that CEO announcement, the company gave an updated outlook for their current fiscal year, where they downgraded their operating income expectations. Previously, UiPath was forecasting operating income closer to $300 million for the fiscal year 2025, and then they downgraded that to $145 million following the CEO change as well. Remember, in the first quarter, the non-GAAP operating income came in at $50 million. So that means the rest of the year is going to be at a pace much slower than the first quarter. In fact, in the second quarter, they're forecasting non-GAAP operating income of zero, approximately break even. So that's the big downside there from UiPath stock investors, wondering how can you go, and you're a recurring revenue model business that generates revenue mostly on a recurring basis. How is the operating income going to go from 50 million down to zero and then start the year at 50 million and end the year at only 145 million? So there's a lot of question marks surrounding this transition, and that's the big item to look for from UiPath when the company announces its earnings and hosts a conference call following those earnings results. More information as to the transition, more information as to the operating income outlook for the year, perhaps a upgrade of the operating income for the year. I'm expecting more likely than not the company to outperform this operating income forecast for the second quarter. I'm expecting something better than break even in the second quarter. And if I don't see that, I'm going to be disappointed from UiPath. And then if they do report something better than expected, let's say 25 million in operating income or better, I expect the full year outlook to be increased as well from 145 million to hopefully at least 165 million or higher if the company outperforms in this upcoming quarter. If they don't, that's going to be a big disappointment because investors in this stock are concerned about that decrease. Okay, longer term, we want to see what UiPath says about the rising effectiveness of artificial intelligence and how it's impacting the business. Is the business still okay despite these rising effectiveness and rising competition from other software and services that are coming out aided by AI that could serve a similar purpose to what UiPath does for its customers? So that's a longer term strategic imperative that I think is more important than these near-term impacts of the operating income and the CEO transition. So that's something to look for as well. Also, we want to hear more from the CEO, the former founder, now CEO again. Does this CEO plan to stay longer term as CEO, or is he just taking and stepping in because he needed to replace the former CEO, or the resignation prompted him to step in because there wasn't enough time to search for another CEO? Does he plan on staying longer term, or does he plan to stay in place long enough to find a replacement? That's important as well. If the founder plans to stay in longer term, I think I would prefer that than if the founder says that he's searching for a new CEO, because that would be yet another CEO stepping into the role in a short amount of time. And that's a lot of disruption for the company, its customers, and its employees to endure all of that change at the top. Stability is more desired than all of that change, especially at the top. So UiPath stock, following that major decline, is now trading at a forward price to sales of 27.79. It's the cheapest this stock has been according to this valuation metric going back 1 year. Now, to answer if you should buy the stock before the company announces earnings, I would say no. There's too much uncertainty surrounding UiPath stock right now to want to buy ahead of earnings. I would wait until after earnings come out to go ahead and make a purchase if you're interested in UiPath stock. Now, I do have the stock rated as a buy. I have it rated as one of my top stocks to buy. So I like the valuation here longer term. I like the company longer term, but the risks are extremely elevated for this company at the moment. And you're going to get a lot of questions answered when the company reveals its earnings results. And that's going to decrease risks significantly. So you may have to pay a higher price following the earnings release, but if you have to pay a higher price, you're going to be getting a company with much lower risk. And so overall, you wouldn't be that much worse off if you miss out on gains following the earnings release. However, the stock price might also fall significantly if the earnings are much worse than expected. And then, of course, you get the company at a lower price. And of course, I will review the earnings results and let you know if I still think the stock is a buy. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.